AI bots, huh? Do you have a thought like, what do AI bots know about stock trading? Stock market requires insights, timing, and a level of genius that only humans can have. It's the right time to change your thoughts. Yes, we welcome you to the world of algorithmic trading. 84% of trades that happen in the NYSE, 60% in the LSE, and 40% in the NSE were done using algorithmic trading. From the looks of it, it seems sooner or later every trade will be done using algorithms. What is algorithmic trading systems? Algorithmic trading systems use mathematical models to analyze financial markets and tells you when to buy, sell a stock, and when to book profits or cut losses. Benefits of algorithmic trading. Human emotions equal 0. Accuracy plus speed equals 100. Comfort equals 1000%. Scalability equals 100. Interested in setting up your own algorithmic trading desk? Get help from Emma2TradeLiveSignals.com. We are now offering 2-week trial now. Join now and get trained by our experienced traders in a real-time trading room. This introductory package includes 27 daily signals from 8 different markets, unlimited access to the live trading room, and unlimited consultations with Patrick. Get the exact entry points, targets, exit points every single day. Real-time texting and email signals. Daily, weekly buy and sell reports before each trading day. Monthly reports and objectives before each month. Get started to trade your own money with confidence and without frustration. Visit www.ema2TradeLiveSignals.com.
Good morning, everybody. This is Patrick MontesDeOca, CEO of the Equity Management Academy here. First of all, I want to thank everybody for taking the time out to join us here in this webinar that I hope you will find it as interesting as I have in the last 10, 12 years that I became aware of the intelligence behind the VCPMI. It has transformed my trading completely against the common thinking, so to speak, and it has allowed me to see clearly the real energy of the market and how it relates to the speculation and the sentiment of the market. To start, first of all, my name is again Patrick MontesDeOca. Just to give you a little quick background. First of all, I have taken a different approach to trading, which is what we do here at the Equity Management Academy, and we have basically taken algorithmic trading systems very seriously as the current environment has embraced technology and changed the foundation, you might say, of the analytical world from a fundamental perspective to a completely highly technical digital world. And so computers are moving into trading. Artificial intelligence is moving into trading, and pretty much we're going to show here how it's done. What are the VCPMI components? The VCPMI stands for Variable Changing Price Momentum Indicator. And it's a combination of mean reversion trading principles that we're going to show you here. We're going to show you who can use the VCPMI. We're going to show you the performance and make a special offer to those attendees for today's webinar. Welcome again to the VCPMI webinar. The power of education can change lives. And what we teach here at the Equity Management Academy is how to use the VCPMI automated algorithm in more than 30 markets with about 90-95% probability factors using the mean reversion. This is a mathematical probability factor that identifies trades with this probability factor, and we'll show you exactly how we do that. Just to give you a bit of a background here, I got more than 30 years of trading experience. I was a floor broker in New York. I traded on the Chicago exchanges. I've been a consultant and a technical analyst for the Mexican government. I created an MCTS Markets commentary, which is an advanced, automated, technically oriented letter published daily in Consensus magazine since 2003. And in 2012, I founded the Equity Management Academy to provide education in the application of basically the VCPMI and artificial intelligence. Some of the publications here that I publish quite frequently, you can check them out at Trader Planet, Seeking Alpha, which is affiliated with the Associated Press, and investing.com. And also we published a book in association with K. Scott McDonald, PhD. We put together a book that explains to you mean reversion trading, the principles, and pretty much in a completely transparent manner, I show you how you can apply this as a self-directed trader. And we'll show you as well how we have automated this artificial intelligence into an application with TradeStation that is completely automated, and how we're using the automation to validate and confirm basically the strength, the probability factor of any trades or decision making that we do in our trading. An approach that works, intelligent algorithmic trading systems. Today's markets are fast, complex data is impossible to analyze without help. Most successful traders use artificial intelligence, AI, to trade. You can level the playing field now with artificial intelligence. And I'll show you. These are some trades that we have done, actual trades that you'll see here. This was a report that was published, and I'll show you the report on around November the 30th. And basically, it's a profit of $21,300 that we made on this trade. This is another trade here on December the 6th, $3,000 profit. And you can see clearly here the levels that we use, which I will explain to you how we identify the trigger points using the VCPMI. This is a actual subscriber that traded in documented this trade. Price spiked. This was in crude oil. The application of the VCPMI is universal. It's a question of customizing it to suit the market that you trade, that is best suited for you, or that you want to learn how to trade. And it will give you a very, very specific structure in a methodology in artificial intelligence on how to execute it for self-directed traders. And we'll get into a little more what these lines mean, what they represent, and how we identify the signal. Here, he went short. Price spiked up to 54.17 level, which is the weekly S2 area, and triggered the short, which means that if the next candle closes below the 54.17 level, it is an entry point. And he entered the trade at the open of the next candle, which is in the case, the candle at 11:30 was at 54.11. He exited half of the position at the 53.42 level on the first dotted line, okay, and then another 25% at 52.97, and the remainder at 52.52. Doing multiples. This shows you how this is flexible enough for you to use it in doing multiples. Really, he says, I believe the power in this particular trade was that the weekly S2 dashed red lines and the daily S1 small red dots were harmonically aligned. And that's what we teach you, is the relationship of the daily, weekly, and monthly trends in identifying the extreme relative level of implied volatility. And with the artificial intelligence and the algorithm, identify for you trigger points with 95% probability. This is an example of how I trade in real time, the application of the VCPMI in a fund that was set up starting in December. We've traded the VCPMI since 2012 on a self-directed basis, and the track record can be seen at ema2tradelivesignals.com. I will give you all the details for you to go see, check, and see the trades actually, date, time, entry point, exit point on every trade that has been done by the VCPMI on a daily, weekly, and position trades until March of 2017, when we moved into automation. And you can see the record there. For the automation, I believe we ended the year roughly around 59% or something in 2017. Even though we stopped in March and began to trade the automation, which shows, again, performance that validates that this artificial intelligence methodology application works as well in the automation. And so what I'm doing here is giving you the opportunity for you to see, without any hidden agendas, completely transparent, how a fund manager applies the VCPMI intelligence. Particularly, I'm using it for securities and stocks, and basically in the educational process that we teach, we use the E-mini S&P, the NASDAQ, and the Dow Jones. But I wanted to show you basically that we're off to a good start in the application of the VCPMI. This is a cumulative benchmark comparison of the performance of the VCPMI since its inception, how it compares to the S&P 500 and some of the other indices, the ETFs, and so on. And so far, it seems to be doing pretty well. I'm excited about the results so far that we have for this particular month. Now that the market has more than likely, excuse me, excuse me. I'm so sorry. Now that the market has confirmed pretty much that we have a harmonic relationship in the market, looks like it made some kind of a top here as of yesterday. We'll look into that. What I would like to do here before we get into the components of the VCPMI is just take a minute and pretty much show you the live chat room that we use to basically invite on an exclusive basis professional traders that do this full time or are passionate about trading, and we share the room pretty much so that we can document all the trades that we do, that I do, that they do, and document pretty much everything that we do. This is the what we call the Elite Live Trading Room, and it's live right now. We're trading the markets right now. We just give you an idea of the last trade here. I just closed out a position in, I was short the mini S&P 2 contracts for a few days, and we liquidated it with $3,765 at $26.91. And the market is at about 93 right now. 93, 94. So this is the latest trade that we did in the room here. And I use this room to, as I said, document the trades, to follow and teach the methodology for our subscribers here in the room, which are an elite group. They're real traders. They trade in real time, and this is why I wanted to create this room specifically without chatter. Okay, I don't have 100 people here, and I'm providing the service, on a blanket basis, because what I've learned after all these times is that every trader wears a different size, and you need to know what is your size accordingly, so that you can begin to manage, so to speak, your risk accordingly. If you're not a day trader, why even talk about day trading? So the first thing I do that I suggest is to watch what we do for a period of time without you risking your money. You can activate, a simulated account very easily and follow the signals that I posted here actually for self-directed traders. And you can see here some of the comments early this morning was reversion unfolding. This is at 6:11 a.m. Reversion unfolding, levels are rolling over to supply. And what I teach my subscribers again is how to use this lines, what they basically represent. When the methodology that we teach you here, and that's in the book, and we will provide you, please make sure that you give us your email addresses, that you let us know, so that we can send you additional material regarding this. But the methodology basically is that these levels are pivot points, and this very specific reason why we only use 5. 5 is a perfect Fibonacci number, and so we want to create a perfect structure for us. And within this structure, you have wave counts, 5 going up and 4 coming down. The wave counts that we use is not 8 like Elliott wave, but 9, as we have found in about 10, 15 years of research. And we apply that proprietary methodology within this structure that gives you, that identifies for you the levels of supply, which is in red, the average price or the mean, which is in green, and the blue levels, which is in demand. And we teach you pretty much what happens when the price, breaks below B2. And essentially, since I'm using this as a teaching tool for you, what this indicates is that the daily trend has broken below that B2 level of support, previous support. And the logic is that when the support is broken now, this level here of 27.15 is resistance now. Okay, and so it transforms the program from a day trading pretty much into the weekly numbers. Okay, and what we do is when you become a subscriber, basically, we give you a password to this website here, and you come in here and have access to in the members area, or your subscription. And if you have the standard daily subscription, you click on here, and pretty much this gives you the numbers that you use for today's trading. This is prospective trading. It gives you the levels that you want to execute today, and it tells you pretty much what the green line means, basically the mean or the average price. And what the algorithm does is identifies 2 levels above and below the mean. Not only does it identify for you the level above and below the mean, but when the market reaches the sell 1 level, for example, of 27.36, it's about a 90% probability that the market will revert. Okay. What was the high yesterday in the E-mini S&P? 2737. 2737.50 was the high. Trading last at 2693. And this is the short that we pretty much took advantage of. Now, when I said to you that when the daily breaks, it pretty much falls into the weekly numbers. And if you take a look at let me expand the chart a little bit here. This is the daily E-mini S&P with the daily signals. And this is the weekly with the weekly signals. And so now that you see that as I said, the market has broken that B2 level, we don't use the pivot points below like everybody else does, right underneath, because there are other levels below. Automatically, the system transforms itself into the weekly numbers. And you can see here that the weekly chart came up 2 days ago, made a high of 2737.75. This activated the short signal for us because we told you here to take profits at the sell one level of 2740. I was pretty close, 37.75. And then we teach you pretty much how to harmonically align the daily with the weekly numbers. Now we got a weekly signal as of yesterday, and the reversion to the mean occurred today, where the reversion on the weekly is 2681. Okay, and this is pretty much the trade that I took out today with $3,765 profit, because it told me, again, I teach you, when you get the price target met, you go flat, you go neutral again. And the low here today was 2695.50. You know, I had a $3,765 profit. I'm comfortable with that. I'm booking it. Then I'm going to wait now for the market to give me the next signal. And on the weekly is this. We're neutral right now when you liquidate. Now, I'm waiting for the market to close below 2681 and activate a bear trend momentum. That would activate the buy one level of 2646 all the way down to 2587. So I am neutral. If it rallies back up to sell one, I'm looking to sell again and go short. This is telling me the market has reached an extreme level above the weekly average price or the mean. And it recommends now that you want to sell into rallies from here. You don't want to buy now because the support now has been broken and now it's resistance. So now we have resistance at 27.15, as you can see here. And obviously the resistance is all the way up to 27.15, 27.22. Then the previous levels become your resistance if you're below those levels. If you're above those levels and the market breaks through these levels, then these levels will become support. Okay? The artificial intelligence teaches you when to identify the trigger points. And so this is how pretty much I look at the algorithm, how I'm executing the algorithm myself in the fund, as I said, and I'm teaching this principles basically that are working beautifully. Okay. And so once again, you'll have access to going back to the website here for a minute. You have access to the daily signals up here. These are the premium package, has about 40 different algorithms in all markets, commodities, indices, ETFs, and stocks, and even cryptos, basically, as well as currencies, as you see down here. And it just depends upon what market you trade. Below here, I make a point of um, revisiting the intelligence on a more on a summary basis, basically. And this is the algorithm, the language, basically, that it teaches you. This report was published on Saturday when the market traded at 2704.50. It closed on Friday, last Friday. And it told you basically here, closing, it gives you the first filter, which is the average price. We kind of began to see a little bearish sign coming into this week. And this is the average price that I mentioned to you on the chart, in 2681. And if you were long coming into this week, it told you here, if we get up to 2740, look to take some profits on longs as we reach the 2740 to 2775 levels. We got up to 3775, and when we looked at the daily, the weekly numbers, and even the monthly numbers, the market has resumed a bear trend momentum for a couple of weeks. And so, we're taking a look at the short side of the market. We're selling rallies here. Again, here, I give also alerts in metals here. Could be a metal alert, could be the lows are in sooner than next week. The weekly mean on the ES is 2681. Is close at hand. A close below 2681 activates 2646 to 2575. If you're looking to get long in the equity markets, I think these levels is the levels that you want to watch and see how the market relates to that, which is probably when everybody would be scared that this thing is going to fall apart. The reversion to the mean, if we come back here to the webinar, uses pivot points, moving averages, mean reversion trading, implied volatility, Fibonacci ratios, and the golden ratio. It's a combination of all this intelligence that uses the filter, the vortex mathematics filter that puts it all together, so to speak, and produces a very specific signal with a stop, a target, and a methodology to follow. These are pivot points. Once again, it identifies for you the extreme level below the mean here. In this case, the buy 2 level, as you can see here. This was a trading gold in June of last year. And the market came down twice, activated, touched that level, activated the setup, activated the trigger point, and the target was met right above it, which was the buy 1 level. Then you go neutral again. When the market closes above it again, it activates another trigger point, activating the target above, and the stop is the level above, below. And you can see here, it's never stopped out the position. We use for day trading the 15-minute bar, and all the stops are on the close of the 15-minute bar. We don't use hard stops. We're not fools. So we let everybody else use the hard stops, and we trade the reversion to that mean, which would probably be the opposite of what the stops are doing. And here you can see the synergy of the market coming up to the mean and then closing below it, activating the bearish trend momentum, coming down to the buy 1 level. A 90 when it comes down there, it's 90% probability that it would revert back to the mean. Okay, and of course, when it crosses and closes above the mean, it activates the extreme above the mean in the sell 1 level that you see here, pretty close, and market came down right after that. So it gives you a tremendous ability for you to manage your profits as well, during the process and the structure that it shows you how to build profits. But you got to be smart as well if you're self-directed and be able to, lock in profits. If you bought it down here at 16.19 and the market is trading at 16.47, and this is a day trade, that's a 30-cent trade, you got to use a little money management. These are moving averages that we use as well, that I identify for us the extreme above or below that mean or moving average in combination. These are all components that are filtered into one indicator, which is called the VC-PMI. This is the reversion to the mean. These trades here were automated executed completely on an automated basis with TradeStation. And this is the exact artificial intelligence that I teach you, that when the price comes down into, it goes up into the supply or red levels, that's basically where you're going to get distribution of supply. And more than likely, depending on how strong the demand is for that supply up here, if the demand is overwhelmed by the supply, obviously you're going to see the price come down and adjust, come back down to the mean. And then you'll see here again the reversion occurring back up again to that level to test that supply level again. And that's what we do, is we trade the extreme above the mean or the extreme below the mean. And I have very specific criteria that I use myself for trading, which means that I don't use or trade the mean, which is a standard 50-50 deviation. I'd like to trade the highest probability trades, and that is essentially when the price reaches the supply level, or ideally the extreme above the mean, which is where we are in the equity markets here as of yesterday or the last couple of days. And I'm waiting for it to come back down into the demand levels. Complicated? Nah. The VCPMI empowers you with the artificial intelligence. How to use the VCPMI reports? Well, the reports do pretty much everything for you as far as calculating the data. It gives you a clear, precise structure, removes emotion from trading, and analyzes the market quickly so that you are ready to trade and execute. You don't want to get into the, you don't want to come to the trading room and try to see what trades are there. You want to know exactly what you need to do when you walk into the trading room. The guessing, the analysis is done when the markets are closed. This is the report. Once again, it gives you very specific levels. It identifies the average price, which is the green level. It gives you the extreme above the mean. It gives you 2 levels above the mean and 2 levels below the mean. And regardless of where the market goes, we teach you to identify the market in relation to where it is with this algorithm. And obviously here it says buy 1 at 12.16. If it comes down at 12.07, that's a buy 2 level. And then we teach you more. You might say we get into if you want to do more than one contract or multiples. And that's what pretty much we do in the room. The VCPMI fundamental strategy follows the concept of mean reversion trading, as I said to you, which essentially capitalizes on the extreme changes in the pricing of a security based on the assumption that it would revert to its previous state. As far as I've been around, I've understood that there's about a 30% speculation in the market that drives the sentiment to extremes above the normal or average price. And that, sometimes creates tremendous opportunities when you get, markets overbought or oversold, or you get above fair value or below fair value. And so that is the concept of the mean reversion trading, which is a contrarian algorithm against trend traders, or pretty much the common sentiment of the market. This is the mean reversion trading methodology that we teach you. Basically, is you when you come into the trading room, if you're day trading or you don't have a position, you wait. You let the price touch the any one of these pivots. It becomes a neutral position. Then it tells you wait again on the second close. Either you buy long, or if it closes above, you put your stop below. Your target is the level above. If it closes below after you're neutral, it activates a short signal. Your stop is the level above. Your target is the level below. Once you understand this logic, then this is like a GPS for your trading. And it's a very methodical way of pulling money out of the market, as you can see. Takes all the emotion out of the market. We use to identify the extreme levels of relative implied volatility. It increases when the market is bearish. Investors believe that assets price will decline, obviously. Decreases when the market is bullish. Investors believe that the asset price will rise. And the common belief is bearish markets are riskier than bullish markets. There's a way to estimate the future fluctuations of a security price, and that is what we use. That's called the relative implied volatility using the mean reversion. Here's an example of basically the implied volatility coming down here, coming down into the level of the VCPMI, and then we teach you when it comes down here the first time it's a setup. Then you wait for the close above it, and that triggers the buy signal. And obviously you see here the volatility turn around and reverting back to the mean and to the extreme above the mean. Who can use the VCPMI? We have flow brokers, we have brokerage firms, we have individual traders as clients. Anybody that is interested in trading the market successfully can customize the VCPMI to adjust to the trading schedule that you have. If you're trading the Globex, you can execute the Globex. The room that I showed you earlier actually is open 23 hours a day. And any signal that is posted or executed by the VCPMI is posted here, and no matter what time it is, whenever that signal is produced. So if you're trading at night, you can take a look at some of this stuff. Please send me your email address so I can send you, an invitation for you to come and see live here how we do it in the elite trading room. This is a setup. This is how we teach you basically a setup. You're neutral. If you come in here, this is a day trade. You have no position here. The first time it touches it, it's a setup. Then we wait for the close above it using the 15-minute bar. In this case, it closed above it, above the B2 level. It activated a buy trigger, and the target automatically was calculated at the level above, and it pretty much met that target. Okay. And so we give you a very specific structure. This, in addition to the algorithms, the database that I showed you, this is a report that was published in November 30th. Is a weekly report. Weekly reports are published by Sunday at 2 p.m. in the afternoon, and monthly reports as well once a month. Weekly 4 times a week. Daily 5 times a week. And here we told you, basically, that was the trade that I showed you earlier. This told me to get out to go short at 28.04. And that was the trade that I showed you earlier, which we made over $21,000. And this tells you very specifically, look to take profits on longs as we reach the 28.04 to 28.51. I've been trading this for a while, enough to know that I use the sell one level the majority of the time to lock in profits. Okay, and if I have multiples, I use the above level, and if it comes down below the first level, then either I get out and go neutral. These are all the methodology that I teach you here, but this is the artificial intelligence that tells you the contract closed at 27.58 when this report was published on November 30th, and it told you that the first filter, the 9-day moving average, was bullish. But it also tells you that if it closes below, it will negate that bullishness to neutral. So you use this as your protective stop, as your protective level to identify the change of the trend momentum. The 27.18 in this case was the moving average, or the mean. It was a market closed above it, so it's bullish. Once again, it tells you if it closes below it, then you're going to go neutral. Another close below it, it activates the short below of 26.71 of 25.84, which are the levels that we got out. Because this told me on November 30th, Cabe shorts on corrections at the 26.71 to 25.84 when the market was at 27.58. Okay, this is how accurate sometimes this can be. And 28.04 was about 90% probability. We're looking at the market right now, given the signal pretty much, as I pointed out to you, with the harmonics indicating that, we're looking at pretty much 90, right now on the weekly, it's about 90% probability that the reversion already occurred, or sorry, close to the reversion here. 2681 is the target, so you can see the reversion pretty much unfolding on these levels here. Who can use the VCPMI? Short-term traders, day traders, intermediate, swing traders, long-term traders, hedgers. We provide the same intelligence, and all you need to do is just customize it to suit your style of trading. Hedgers use it to hedge when the markets are extreme above the mean that they are looking for, the average price. Speculators use it to lock in extreme levels above or below. And professional traders use to pretty much trade the reversion to the mean, which is trading against 90% of the people that think one way, and the 10%, is making a fortune on those 90%. You've heard that 90% of people lose in trading commodities, right? Well, that's because 10% are using this to make a fortune on that 90%.